Hello, gentlemen and ladies. Delighted to be with you again. We're on the Husqvarna 501 FE, and we're going to be talking to you about the Psyop that was the 60-40 portfolio, the Petrodollar ruse, and we're going to be rewriting and chatting as well. So I hope you're going to enjoy this. I dumped the goggles so that you could have eye contact with the man instead of it being just a Martian with the one-way glass. It does limit how fast I can go. I've already been pinged by a stone in my cheek. So let's go and see what roads we can find, what paths we can take, and all that I have to tell you about the world. At the same time, silver trading through $43. It's going to be an interesting chat. Let's start her up.
Glad to be with you. It's the Market Sniper. So, in quick highlight news, silver traded 43.09 late Friday. Silver had a very strong week and a particularly strong Friday. That is despite the shenanigans of the rate hike, which brought a bit of volatility to both gold and silver. The interesting part that is very positive for silver is with the rate hike shenanigans, silver was actually relatively less volatile than gold. Into the rate hike, it traded largely up. It wasn't having any of the downside at all, to any great degree. It's a very positive development. But the real part that I want to talk about, as well as acknowledging precious metals continuing to be strong, continuing to be the main way to play all this, update there. Gold silver ratio trading down at the moment. We want the 75 and the 73 to fall to trigger a major outperformance period for silver. But the big Psyop is the 60-40 portfolio. We've been on record long ago and repeated a number of times that the 60% equities, 40% bonds portfolio was an engineered and popularized portfolio balance, and the sold up and down Wall Street and of course in the UK, Western world. The 60% on risk, your equities is your alpha, and your bonds will go up when your equities go down. That reduces the volatility in your equity portfolio. Okay, now, when the equities go down, the counterbalance, if you will. Now, as much as we maple September 2024, the key part of all this is that bonds are now in a financial regression era, where they will continue to underperform immensely. They will continue to underperform immensely. And they're going to continue to underperform immensely for a variety of reasons, not least of which the bond market, the 40-year bull, as we keep reminding everybody in 2020, turned. That means you don't get capital appreciation in bonds. It also means you're not getting a suitable rental, or let's call it yield, on your interest rate, given the stagflationary environment we are in, which we would characterize as hyper-stagflationary. Nothing like a reverse camber road to get me out the sandal. So we're going on a little dirt ride. I've no idea where I am, and I've no idea where I'm going. But we'll get there anyway, I'm sure. So, with bonds being muted, both in terms of its insufficient yield and its capital depreciation, they were supposed to be the boring, slow-moving, but very steady eddy asset. Just to remind you, in 2020, through to 23-24, they lost 55%. That's not slow-moving, low volatility, but steady. That's high volatility to the downside. It's very high volatility, and it doesn't justify, for the yield that it pays, such volatility. Listen, people will take an 80% crash if you're in Bitcoin and you're making 1,000%. I can tell you what they won't take. We're already going off piste here. We're going to have to cut through a plowed field. It's going to be interesting. I hope no one shoots at me with a shotgun. Get off my private property! This road looks older and less worn. So steady eddy is suddenly, okay, this is going nowhere. It's not so steady and actually a massive loser. So not so steady eddy is now going to face massive underperformance for decades, quite possibly ending up being re-rated at near zero, if not zero, at some point. Get that tail out. Okay, we can't go too much further in this direction. Let's go back and explore some more other paths to take. So the 60-40 was a psyop of the petrodollar. People don't understand this. What was sold to you as financial advice was actually creating demand for debt instruments. It was part of the petrodollar. It was another intricate part of the banking cartel working to establish the status quo. And your money and assets, instead of being 100% in equities, and by the way, it's also important to realize that legacy financial vice always had gold in a portfolio for exactly these times and reasons. Why? Because of the coin clippers. The well poisoners and the coin clippers. The tertiary extractors, the Pharisees, the money lenders, have gold because somewhere there's a Pharisee cheating the system. A Pharisee cult of tertiary extracting money lenders that are proliferating the derivative proxy that they've established. So we'll go on a little further to find paths. We don't like on-road. We don't want to share a road with a car. Stay in the passenger lane, let them go past. So the derivative complex of money, which is fiat, is why gold, let's try down here. I'm going to try every path I can find. The derivative complex of Pharisees and moneylenders always want to put a proxy token they have control over the issuance of between you and your gold. In fact, you talk to the legacy Italian families of great wealth, and they are 33% gold, 33% property, 33% equity. There's no bonds. Zero fucking bonds. Buy other people's debt instruments, people who are reluctant and have overborrowed and would rather not pay you back. That's not a great idea. Anyway, so the emergence of the 60-40, and it got particularly dominant after the financialization of everything, which was, and the peak bottom, the peak financialization of everything was post-dot-com boom, when everyone said there's no point holding gold. And even the central banks started to buy this crazy narrative. There's no point holding gold. And of course we had Gordon Brown in the United Kingdom sell the bulk of Britain's gold at 400 tons. And I don't believe it moved at all. I just think the name on the 400 tons clipboard went, the people of Britain no more. The Rothschild family now purchased for $256. That $256 is now $3,650, which is not only a 10x, but probably going closer to a 15x. Look at this beautiful view, by the way. So they got the 15x after getting the cartel to sell the people's assets. Remember, you pay tax, and the nature and the reserves are actually held for the people by the government. And to be custodian thereof, and to earn a little bit of income, you know, nature's parks, you pay people, tourists pay a little bit to go, whatever, a Grand Canyon tour or something like that. You maintain it, you keep a toilet there that's clean, and you make some money from tourism on behalf of the people, and it goes towards infrastructure and expenditure, which only doesn't happen. Gordon Brown sold to an unknown buyer, it must be said. So that's why I assume the bottom buyer is always the insider that knows what's coming next. The people's gold. And got very little for it. $256 an ounce, where you would get $3,650 today. He's your IFA. Now imagine you had an IFA that was that bad and screwed up your financial advice so badly. I don't know what your disposition would be to him, but probably not too favorable. He might have been fired. And in fact, you have to ask, where were the people saying, no, no, mate, now's not the time, and that's not the price? Well, you see, there's no one working for you. You think you voted a government that's representing you, but they don't. Back to the 60-40 portfolio, as said before, previously, there was always a gold component. The biggest psyop of the 60-40 portfolio was that it went all paper and took you out of tangibility that protected you, that's gold, physical, protected you from the Pharisees and moneylenders of usury finance that create fake proxy tokens and devalue your net worth by proliferation. And that's why silver's hitting a higher quarterly candle close than in 2011 and 1980. No, it hasn't taken out the daily highs of 1980 and 2011 yet. I know that, but if you look at the candle as it stands, not so sure I fancy that path, especially without a visor. A lot of water damage hasn't been used in a while. Turning around in a water glut is actually a big fat pain in the arse. Yep. So 60/40 was a psyop of paper. Supremacy of the financialization of everything. Equities, you're exposed by ETFs and the great taking. And bonds are exactly where the money lending Pharisees want you. Kind of rocky and technical here. Need to concentrate a little bit, otherwise you'll get a comedy shot as well. So 60/40 portfolio was a paper psyop that separated you from real money. And now Morgan Stanley have come out and they're doing the tactical retreat. Morgan Stanley Chief Investment Officer is now talking about, and it's a big concession, but it's still a tactical retreat, a 60-20-20. Suddenly, gold has made a re-emergence. And not at 1% or 2% like most family offices and hedge funds are at. Straight in at 20%. 0 to 20%. Hey, the new 60/40 is 60-20-20. And the only thing that's wrong in that, even though it's moving in the right direction, is the 20% allocation to bonds. Hey, if something's not going to work for a multitude of decades and could end up being zero and bringing about major losses to your portfolio, don't have 20% in it. How about that for an idea? Controversial idea. We've repeatedly stated since the turn, let's give it some head. I was saying how everybody needs a throaty 500 in their life. I said every lad, and I had one of the ladies in the comments, so do the girls. Good on you, mademoiselle. You do too. Ride safe and enjoy. It's nothing like it. It's bit of nature, nice talky 4-stroke. Yeah, well done. I'd love more women to be on bikes. They're just a bit intimidated, a lot of them. But not all of them. Some are fabulous enduro riders. Anyway, back to this 60-20-20. 60-20-20 is the new Coke for failing bonds. But the chief investment officer at Morgan Stanley is never going to tell you, hey, fuck bonds altogether, man. Give it a 0. Should try that road as well. They're never going to say that. It's not going to happen. Let's take you onto the beach. This beach I can go onto. There's no turtle eggs. They're never going to tell you, have a 0 for bonds. Because that's an admittal, a banker making an admittal about the state of the system. But I'll tell you, because I told you before all these people went 60-20, that there's no reason to be holding bonds in any way, and that I've actually shorted them and made a lot of money and intend to short them again. As part of their devaluation in an over-indebted debt proliferation, an over-extended, full-blown debt proliferation. Let's see if we can survive on the beach. Go right down. I should have just taken it at normal tilt, but whoops, now I've stalled the engine as well. No good, especially when you're at a 45-degree angle pointing down on loose stones. Welcome to the beach. Welcome to part of my life, part of my time, in part of the many countries I live in. We're going to go super sexy sideways on these stones, and it's fun. There we go. Got a bit of hard sand. I'm guessing the side stand's going to go dipping into the sand, so let's get a stone here. Turn that baby off. Let's keep the camera going on this side. Yep, let's take a break. I love this white rock. Let's take the helmet off for a bit. Yep. They ain't gonna tell you. They just won't. But they are walking towards truth's door. They've just halved the bond holding and brought from 0 to 20 the gold holding. Think about the enormity of that. Think about the enormity of a banker in Morgan Stanley, the chief investment banker, not any banker, saying, hey, cut your debt holdings in half. Me trying to find this microphone clip on my strap. It's like most men trying to find the clitoris, yeah? Floundering around like a drunk. There she comes. Oh, the sea came right up to the bike.
I maybe shouldn't have been so pucker and full of it. But then it wouldn't be me if it was all safe. By the way, last video I did, which was the first one on this bike, yours truly went out on reset sniper. I went a little bit apeshit, as I'm sometimes prone to do. Would have done a lot of damage to the market sniper channel. Go and check out the reset sniper, by the way. They've actually cut bonds. They've cut bonds by, wait for it, 50%. And out of nowhere, they've reintroduced yours truly gold. Isn't that funny? If you want a better sign that it's the end of the petrodollar, when the major bankers with the word Morgan in them start cutting bond allocations for gold. Because if they don't get out in front of the news and they just let it happen, people move their money to other asset managers. Eventually, truth outs. Eventually, the truth outs, guys. And the truth is outing. 55% collapse on that bond market. TLT, long-term debt. The highs of CB19, March 2020, to the lows, which we're very close to, 55%. We warned you. Escalator up for 40 years, hard down, 55%. Now you're getting the fiat deval on the dollar. That's what's happening right here, right now, in this world of ours. And I can tell you, it doesn't get any better. The fact that they've retreated so hard on bonds to 20%, a cut in half, is a huge admission of the dollar debt system. It's a dollar debt system. It's not just a debt system. Money is borrowed into existence. Dollar debt. USD, UST. GBP gilt. Yeah? There's a debt and there's a fiat. You don't get one pumping to the moon and the other one crashing. It doesn't happen. You can get technical divergences for a short period. Long run doesn't happen. The debt devaluation is the beginning of the fiat devaluation. And the only reason you aren't seeing it is because the dollar's down 15% against most other currencies. But the other currencies are down 30% themselves. So the dollar's down 50. 45, 50. That's what's happening here, guys. That's what's happening. And I tell you, there's no point taking halfway steps. Once the truth is out, it's a bankrupt company. Don't hold any shares. If you find out on the news, okay, we'll taper our holdings. No, it's bad, get out. If it's bad, you get out. You don't stick around to take losses. You don't serve as exit liquidity for some other psychopath who's telling you, no, you should still have 20% bonds. There's no reason to have 20% bonds. No reason at all. You should be getting in and out of shorts on bonds and hold none investment. Statement of fact, quote me on that. That's Francis Hunt's take right here, right now. There's no reason to hold bonds. Any bonds, not 20%. And this is what I call tiptoeing to truth. I've gone and got a twist in the strap, so let's fix that. There's no point in tiptoeing to truth. Just get to the point of truth. The sooner the better. Don't stop along the way with a convenient lie. Or let's get used to this truth slowly. You don't have to. And it's expensive. He can't say the new 60-40 portfolio is 60% equities, 40% gold. He's never going to say that. He'll get called out and derided and all sorts of things.
It's not the thing to do. He won't do it. But as bonds continue collapsing, watch that 20 become a 10 and a 5 in some other bank. It'll never be zero, even though it deserves to be zero. It will never be zero. They'll never make it what it should be. Zero. And hey, by the way, take loads of opportunities to short this piece of shit. Like Stanley Druckenmiller and Paul Tudor Jones, who have the leverage and the access to do that I could never have. But we were 4 years before them and 5 years before the rest of the world realized the debt bubble is over. Some still think there's going to be major bond rallies. Some still say, look, record issuance of treasuries and a well-bid auction. And then you see the buyers are. The biggest jump, I have to debunk this, by the way. Oh my God. Everybody's saying the debt market's over for the treasuries. Look at this. A very strong auction. Record buying by the United Kingdom and France. Excuse me? The two bankrupt nations having a debt collapse? And that's your for-profit buyer? That proves there's demand for your depreciating asset? Those are slave proxies that are jumping in and committing to their death cult of debt. They're all going down on debt, and they're ensuring they're going down together. And France, currently in political turmoil, and the United Kingdom in massive black holes, like France, are falling apart. So only nations that don't do sound money and are falling apart and don't have the money, really, should be shoring up their own finances, are investing in a shit asset like treasuries. And that's proof of the fact that there's still demand for treasuries. Okay. What it sounds like to me is proof. Let's take you for a little drive longer. Proof of bereft nations that have agreed to all fall down in a massive, orchestrated, timed, debt-based collapse. That's all that proves. These people have zero reset sniper understanding. The West goes down together. All fall down. Ring a rosies, a pocket full of posies. I want to show you this view. There's a guy selling ice cream here. Nice. Aphrodite's Rock over there. Popular beach. Some guy's got some chairs out to sit down and have a view over there in the orange. Making sure the rock doesn't disappear. Aphrodites swam and attained eternal beauty.
Yeah, she attained eternal beauty in this water. If you wondered why I look so good, well, you know, a man who dips regularly in this sea. Don't come any hotter with all that mystical Greek goddess water swirling around me. Yeah. So let's let these people carry on in peace.
Yep. So the 60-40, let's recap what we've been saying. The 60-40 portfolio was a psyop to push money into treasuries as part and parcel of the petrodollar. In the same way Kissinger went and did the deal with the Saudis, you buy treasuries, you sell your oil in dollar, and then no one will, hey, nice oil fields you got there. It's time we export some democracy to you. That deal, that was an anti-gold deal. Kissinger was anti-gold. The establishment of the petrodollar was anti-gold. It was paper contracts above all. Now the interesting thing is, the Saudis have dumped a lot of their treasuries. The Saudis have dumped just about all their treasuries. Not all, but they've cut their holdings immensely. But the United Kingdom and France, they see immense value in US debt. At the same time as Morgan Stanley Chief Investment Officer is saying halve your debt holdings and take gold from 0 to 20%. So you've got to decide who's part of the slaves that are being buried with the pharaoh, the US dollar pharaoh, and who's pursuing sound money and doesn't want to die, actually making some sound money changes. Because they can't both be right. The Saudis are not going anymore. The Chinese are not going anymore. The Russians are not going anymore. But the debt bankrupt nations of the United Kingdom and France are one of the biggest adders of US treasuries recently. Wow. I mean, there's so much in that. And if you don't have a reset brain, you don't understand. It's the wrong buyers, babe. They are not for profit buyers. They know. They're just keeping America up so that they all fall down together. America needs the support. You know? So don't wait for the 60-20. Go straight to the, and I'm going to give you my model portfolio right here, right now. You want a percentage mix. You want the Francis Hunt hedge fund, were I running a hedge fund, mix. I'm going to give it to you right here, right now, for free. The model portfolio from me to you for these times that should last you at least for this decade. certainly 15 years safe. Goes like this. 50% of your portfolio, the 50, is a combination of 30% the actual precious metals, gold, silver and platinum. I would still have gold by value, the predominant holding for the stability, but your alpha is going to come from silver and platinum. So of that 30%, you can be 15 gold, 10 silver, 5 platinum. So you've got a 15, 10, 5 for a total of 30 in the actual metals. The other 20% of the 50% exposure is miners. A massive alpha bringing to your portfolio. We go over the makeup of those miners. You don't need to have many. You don't have to have them all, by the way. You just have to have 3 of the best. You don't have to mimic an ETF. You'll probably do better with 3 of the best. We discuss them in our community. You can find out who those 3 of the best would be. But they'll be names you know. Gold, silver, and platinum miners. Note also the platinum miner. I do consider platinum the wild card for supreme performance. Then the other 50%. This is where I'm going to surprise a few people. I need to stand up here. This might be a bit technical. The other 50%. Go east, my friends, go east. The Shanghai SE Stock Exchange A Shares 50 Index. You can get an ETF for that, or you can buy a portfolio representing that. The Shanghai. Now this is part of the Go East. The Go East part is 30%. And I'm splitting the Go East into 2 nations. Singapore, the Straits Index, and China. That's not to say India and others won't have big runs. The equity runs coming for those nations are going to be huge. The STI Index. The Shanghai, and that should be 30% of the other half. So you've got half in precious metals and precious metals proxies. 30 in precious metals, 20 in miners. Right? The other half, you've got 30, which is made up of 15 and 15. In fact, I might go 20 and 10. China 20. Singapore 10 on the index. Yep. What about the other 20? The other 20, crypto. Yes, crypto. But not Bitcoin. XRP. Tron, and I would take Monero in case the privacy turns out useful and for its growth. Everything I've mentioned here that doesn't make sense to you is in a macro HVF. Upside, macro. That means fortnightly or monthly or more, quarterly even. Tron is, XRP is, Monero is, the Shanghai A50 is, the Straits Index is. This is a money-making portfolio. Zero bonds. I will trade bonds short technically on select opportunities. But there's zero bonds in it, of course, as you can well imagine. So forget Morgan Stanley's 60-20, a very late pivot after the bonds. These guys are always hind in sight adjusting. They never said in 2020, hey, the debt market's going to crash. Hey, you're in a setup for major downside. They're coming up now in 25 and halving the bonds. You've just taken a 55% smashing on bonds. And now they're telling you, hey, maybe you should cut it. Thank you very much. I've lost half my money on what you had me in at 40%. You know? Where the fuck is the use in that? We took a bath because of you, you know? Beautiful, beautiful we're seeing. Look at the devil and the deep blue sea, because that's where you are right now, friends. You're caught between the devil and the deep blue sea. And you're with John the Baptist, the financial alchemist, the Noah of all things. Rain, when it's coming, it's coming. The forewarning prophet. The forewarning prophet is here now and talking to you and telling you exactly how it's going to turn out. And has just given you real alpha in a portfolio that many would charge 2% management fee and 20% performance fee. If I cared enough to get regulated or to fall under an umbrella, that's exactly my portfolio. And you know what? I'd be up about 60-70% on the gold. I'd be up even more on the silver and probably about the same on the platinum. My miners would be up in most instances 100% plus. My crypto will be mildly up, call it 15%. For the year, don't forget we began this year with XRP at 60 cents. We called that. So if you actually take from the beginning of January, the full year, you would actually be very well up at 60 cents. You'll be about 4x on your XRP and your XLM and your Tron, and Monero is up too, but not by the same amount. The biggest performer is XRP in that one for the year to date. Oh, and by the way, your Shanghai index will have just triggered and you'll be up 10-15%, and so will you be about 20% on your Straits index. There's nothing that isn't double digits up in that portfolio, and some of them are triple digits up. And it isn't, okay, but that's the mix fucked now for the year. It's getting better from there. The real jam's still to come. The real portfolio, the Psyop. So what have we covered? 60-40 was a petrodollar Psyop that got not only the Arabs to invest in treasuries and to use the dollar for funding, a la Kissinger, who's an anti-gold human being and Satanist. They also got investment protocol, and it's a must-do to balance your portfolio, buy bonds. They did that until it absolutely broke in 2020 after the CV19 splurge of proliferation and debt, meaning devaluation for debt and the fiat that's associated with it. That's where you are right now. Your debt has fallen 55%, and in real buying terms, your fiat currency will have, in real buying terms, and cost of living, fallen over the same 5 years by 55%. That's a Siamese twin, conjoined at the head. You can't bury or drown one baby and not drown the other one. That's how they work. They're born together. They're born together. You're being told they're somehow separate, completely unique and moving in their own space things. No. Fiat is absolutely conjoined to its debt. As the debt becomes less investable, so does the currency. They will devalue the debt by price in the currency, and they will devalue the currency. That is how they deflate that Ponzi. That is why it's financial repression for you on any form of debt holdings. Let's head the way home and we'll recap. Some pretty nice cliff edges here, bud. What a viewpoint. Only the goat shit and I have a view like this. Beautiful. I think I need a swim in the sea. I'll go get a swim in the sea, I think, after this. It's really good for your battery, by the way. You are a battery, you do realize that, I hope. Kind of rocky terrain, yeah. Such a fruity engine, I love it. Yeah. Come on now, big boy. Whoop. Pride before a fall, as they say. So, the admittance of the failure of the debt market comes in the form of the 60-20 suggestion. Because they've got to stay out in front of the narrative. They can't be static anymore. They can't pretend. The world's rising up, not as quickly as HVF method has shown them. They didn't believe us, but they believe Stanley. They believe Paul. So you should, if you want to thank us ever for hopefully the alpha we give you, use the affiliate links below. I've made a ton of money on SimpleFX trading the gold. They've been great. We also have Pure Gold for buying gold. Our gold broker. Have a second supplier. Believe you me, unobtainium for silver and gold is not going to be that far away. And they'll happen at different rates. You might get the last few bars out of one, and there's nothing left in your usual dealer. Yep. And by the way, we've extended. We had a lot of demand for the chats with Francis. It's better for you to have a chat with our sales consultants first. And if you want to have a final chat with me, ask for it. Before purchasing, by the way, you can do that before purchasing. Get an idea of the products. Great. Get an idea of the products first and what you get. I don't do consults typically. I don't have that much time. That's why I do these YouTubes, to do scale. But I'm normally at 2,950 for 45 minutes. We do 50% off, 1,475. And you can have a chat with me, and it can count as a credit towards a product if you act in the next 10 days. Get an idea of the products first, I would say. By booking a call on the links below. Yep. That portfolio will last you for a decade and a half. And it'll make you money every year. It wouldn't surprise me if you get triple digits most years. You can do it yourself. And I'll even share a diagram. Follow us on the Market Sniper. On X, the Market Sniper. You can also follow the Crypto Sniper, by the way. And the Reset Sniper for the video where I ran out of petrol. Something interesting always happens. Haven't been using the bike for a while. some of the premiumness of the petrol leaks out because it's been standing too long. The octane, as they say. Bit of water gets in there. We were running a bit low. I ran out of petrol and abandoned the bike. Went to go catch my mate for a couple of drinks and then do the rescue act, the recover. Yep, I'm taking you home. And I would say to you, don't wait. Set up that portfolio structure and do it. Recognize the debt market is over, and recognize that they are now admitting that the debt market is over. And only devaluation awaits. Hey, it looks like some sort of festival, wedding, something. I want to kiss the bride. Unless it's a big fat Greek wedding, in which case no. Which is quite a big chance of it being such a thing. I've just been stupid as usual. It's all good. All good, all golden, all brides are good, all Greeks are good. Even the fatty, lovely, chubby ones. So I finished a fast. Let's talk about something different. Yesterday with bone broth. I fasted from Monday to Friday. I was pretty weak Friday, I have to say, but stand-up weak. And then I had some bone broth, and then I felt probably very weak. We're suddenly giving your stomach something to do after 4 days of nothing. 4.5 days, 5 days. So there I was having my Friday morning lie down, which is not typical of me. I don't do that. Once up, I'm up. And yeah, I broke it with bone broth, a bit of yogurt, small bit of meat from the bone broth, very soft, boiled forever and a day. Very little of it. Don't feel like I actually want to eat. Like very light, just fluids. So it's kind of insane on 0 calories of energy, but I felt energetic and light today. Thought, let's go out and have the ride. Cold plunge, get nice and cold, jump in the bike kit. It's middle of the day here and warm. Don't sweat as much. No coffee, no anything. Just water. It's quite a thing. Glad I did it and I enjoyed it, but it was tough in parts. I also noted my weight typically between 89 and 92. Measured myself, I'm 85. 85.6. So I probably lost 4 kilos. Now there'll be some rebound on that. Once you start having meals again, you start holding more water, etc, etc, etc. Oh, this is where my camera fell off. The predecessor to this nice new one. Do you like the new camera? I hope you do. We keep investing to be better. And I hope, and I'm glad, the audio is good. Most of you have said the audio is very good. Don't forget there's big Rorty bike engine on here as well. We're putting a lapel mic inside the helmet, recording it onto a Zoom, for those of you that ask, and thank you for noticing. So that audio quality is good. Here's where the camera fell off. It was kind of bumpy and I was coming down full tilt on the e-bike. The e-bike will be back. The batteries will come this week. For those of you missing the e-bike, I put too much air, I think, in the tires. That's why they're kicking out a bit more as well on the power, because they were both flat before starting this video. That's why I started at the garage. Anyway, thanks for spending time with me. Hit the like and subscribe if you haven't done that. We appreciate it. Sharing is caring. Use the affiliate links, pay what I pay. Trading gold on SimpleFX, SCM. Doing it on all the platforms. Having separate funds. Spreading it around. Tickmill. And buy through our broker for gold. Have a second provider. Silver will become unobtainium before gold though, I think. You ready for a final blast up the hill if you're still with me and you're enjoying the ride? No more finance, no more economics, just a little ride. We're going to climb that hill up top there. You're going to gas it all the way up. It's kind of steep. We'll be meeting community members, a couple in Panama soon. And then in January, our top gun and trade leaders, a number of them, will be coming out to Cape Town. In South Africa for the summer period down there. Winters suck. How many years do you think of life do you have? Winters suck, man. Unless you've got a snowmobile and you've got snow sports and skiing, winters suck. Vitamin D deprived, you pick up weight, you sleep more. Life is for living, and the way we do that is warm climates. Getting ready for that hill. Yeah, baby! That's the hill. This bike eats hills. We're now back on the plateau. I hope you enjoyed the ride, the chat. We'll catch you soon again. Stay safe and catch you then. Bye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups. and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.